Shidim Shari. Good morning. Welcome to the weekend stock market review. Saturday, May 25th, 2024. Let's start out with the VIX. Flashing danger. Trim, right? The mantra here is anything that is too lofty should trim some. Raise your stop. Do the smart thing. Not add more. Hey, for those that are smart enough to add more to NVIDIA and write higher, congratulations. Like I said, it's not easy. The only thing I can do is stay within my own discipline. But for now, the VIX is flashing danger, and that is it. If you have cash on the side, pick your spot. Hold on to your cash. All right, let's jump to crypto real quick. Nothing here to see, right? I mean, it was hot early in the week, and people get all excited, and then it hit this trend line that I color white, and the previous 3 times it got over it and danced a little bit before it gave back. This time it barely get a sniff of the white line and rejected. Okay, so let's go and revisit that white line. What is that white line about? Let's go back even 5 years, 10 years. Okay, see this? This was the support, key trend back, okay? And once it broke, it took a long time. And yes, we got there, and it's tough. It's not much I can say, okay? Doesn't matter what's going on. It is what it is. Now, Ethereum got the ETF approval, right? And there's room to run. Does not mean that it won't come down to the 3,500. So if you want to, if you trim up here, perhaps buying back in a 3,500-ish might be a thing to do. I bought down here, okay? So no, I'm not selling. Anthony and I bought Ethereum in our crypto account when it was down here under 3,000. So no, we're not selling. I asked Anthony actually a couple days ago. He said he's not selling. So for now, that's the play. Okay, if you sold, certainly looking to add back 3,500. If you're more patient, of course, 3,189. And for sure, I think 3,040, right? This 100 MA, where it was support the last time, and then this zone of support. Yeah, be patient. If the overall market pull back 3%, 5%, can Ethereum come down there even with the ETF approval? Absolutely. It's a risk on, risk off trade. All right, jump to bond. TLT. Mixed economic data. Well, guess what? That's what you get. It's riding the 50 MA. Okay, it's not much here to say. Unless you have extremely bad econ data, then it will spike into the 92, 93 zone. But until then, it's gonna dance. Okay, it's gonna dance around here. If you want to buy, no doubt, buy down here in the 89 range. If you're patient enough, you might want to pick up at 88 range. Okay, but right here, I'm not adding, I'm not selling. I'm just collecting my 31 cents a month dividend. It has been nice. to be able to collect that dividend for the past year plus. Um, let's move on to the major indices. Nosebleed, and then you got the Dow took it on the chin. Took it on the chin. Oof. Yeah, I what can I say, right? I said no touch. Okay, I was not bold enough to go short, but yeah, where would the Dow be a spot where I would say go long? 385. Okay, it's not it's not very far away. You're talking 1.5%, and we back to the 100 MA. Okay, so for now, the 20 MA is supporting. We'll see how it goes next week, but yeah, SPY held up a little bit better because of course, Nvidia, right? Same thing with the QQQ. So it's a no touch. To me, no. If you have it, good luck. Sell cover calls, raise your stop, do whatever you must do to protect your gain. Okay. Same thing with the QQQ. Yeah, you are back up at the backside of a channel. Uh, yeah, I can't. There's no way I would recommend anyone right now to go buy into the QQQ. Um, you can. I'm not telling you not to do it. I'm just saying I'm not doing it. Now let's talk about the other indices that I usually forgot is of course the small cap. Oh boy, if you buy into the narrative that small cap is gonna be booming in December of 2023, as a lot of expert, Tom Lee included, predicted, well, guess what? It's flat. Okay, it's flat because money is still chasing after big cap, especially big tech. Okay, so until that narrative change, it's hard to say that small cap is the place to put your money. Um, not a fan of this. Okay, I don't hate it, but I already have plenty of exposure in small cap stock individually that I don't need to buy the IWM. But yeah, it's tough. It's where would I buy IWM? To me, down here. Okay, it's lining up nicely with some ref flow. Okay, where it bounce. Okay, it bounce here, it bounce here, right? I mean, it's a nice bounce. Make no mistake. There's a 10% move. Okay, from here to here, from here to there. So if you want to buy the IWM outright, put in an order at the 200 MA, or and raise it once a week until until we get there. And it's coming next week. After next week, it's gonna be above the ref low, but I think having an order in at 191.37, something like that, it would be a smart thing to do. If there is a 3 to 5% market pullback, there is no reason to think that IWM is going to hold up. Okay. Okay, let's do Max 7. Start out with the big gun Nvidia. Holy moly. Holy moly. Okay. Reach 1064. Do nothing here. There is nothing to do. I trim at 1025 the day of the next morning pre-market of earning, and that was it. Okay. Where to buy? Gap fill. That's it. As far as order to buy back Nvidia on any kind of pullback, gap fill, right? Which is a 960.2, and then 20 MA 920 ish, and then 895, 890 ish. Okay, so that would be the three spot that I would put in small orders, and then of course I I have one at the 100 MA that I revise up once a week. It was 790-ish as of last week, but by Monday I will raise it up to 800 because that's where it's gonna rise up to. So you know, keep doing it. Eventually, it will revisit the 100 MA at some point. Okay. All right. Let's move on. Tesla. Eh. That's all I gotta say. Meh. Okay. It's. I guess I just don't like to trade Tesla. If it's in the zone, if it's down here, I don't mind selling put spread below. I don't mind owning share outright down here on the channel low. Okay, because I'm a channel trader. So, but here is like middle of nowhere. So nah, nothing to be excited about. Okay, if you want to go long, you certainly can buy at the 50. But to me, it's safer to wait to buy at 158, the low of the gap up, right? If you want to go long, 157, 158 ish is the spot because Tesla can easily gap down. Okay, this is not gonna hold. Okay, look at the way it behaved in the past many months. The MA don't mean a whole lot of things. Right now, the only MA that mean anything is the 100 that it sell off twice already. Okay, so all that say is concerned about that one. If you're using the 20 MA as a gauge to go long and strong, well, guess what? I hope you're smart enough to go long here and get out there, right? Because otherwise, yeah, it's below it right now, barely, but no, it's enough. Apple still strong. Buyback is holding up quite well. No touch here for me. Okay. Hopefully you raise your stop, right? Uh, Not much I can say. If you didn't raise your stop, then I don't know what your expectation is as far as Apple. Earning is manufactured because the buyback revenue declining like 5 or 6 quarters in a row, whatever, right? It's the product is stale as F. As F. What is new in Apple that is anyone excited about? I don't know. I like Apple product, but as far as me running out there to buy a new iPhone, not a chance. Not a chance. Okay, so or iPad. I might buy a new Apple iMac later this year. That is on the table. So no. Google. I have an order up there. Okay, the trim. I like what I'm seeing here in Google. Uh, no hurry. Okay, no hurry. It's they're printing money. Okay, with YouTube, they're printing money with ads right now. With all the political ads, they are printing a lot of money. But it would be a bad idea to put in a partial stop on, say 20% or 25% of your position at the 20 MA because a market correction will slice right through it. You can always buy it back. Okay, right now, put a stop in at like 170.9 ish, buy back 162. If it drop down to 156, oh my goodness, back up the truck, right? Right now, I don't have a stop. Well, my stop is way lower. I have a stop that I have not raised in a while, but I should raise it if I can remember to do that by Monday. Partial stop, 20, buyback at 165, 162, 160, 156, back up the truck at 151, kind of move, right? So yeah, I like Google, but I'm not buying here. Okay, I will trim 180 and above. Meta, um, almost fill the gap, almost. Okay, the gap is, let's see, 484. The gap is 484.58. Okay, so it has not quite get there. So it's lining up quite nicely with the 50 MA. So if you want to trim or feel like a need to trim, make sure you have an order right there. Okay, right at the 50 MA. It has not seen the 50 MA since the gap down, right? So yeah, I'm not buying. Okay, I'm not buying. I'm not selling. Uh, I'm content in holding on to my Meta. I do like Meta a lot. It is in my top 3 favorite stock to own as far as big tech. Um, let's talk about Netflix. Crazy, crazy Netflix. Okay, fill the gap, dance around, and move to all-time high. Boss, boss. Okay, nothing to do here. Can't chase it. Would love to own it, but for now, if it get down to the 20 MA, then I will consider it on a major pullback. Okay, on a major pullback when it comes down to the 100 MA, yeah, 583, 580, between 581 and 583, I think is a spot that I would re-enter with less concern. But for now, too high. If you have it, put in a stop where I would say where it was dancing, but it's like I said, it's a lot to get back. Okay, where's dancing is like 615. Whew, that's a lot. So if you don't want to be too greedy, put a stop right at the low on Thursday, which is 638. And that's a problem with something like Netflix. Even if you put a stop, say $10 below where it is, it moves so much. Okay, it moves so much because $10 is literally not barely 1.5% ish. Okay, a lot of stock move easily 1 to 2% on any given day in a range. So yeah, that's a problem with something like Tesla. Okay, it's a fairly volatile stock for a big number stock that it's hard to put a stop like that. But yeah, do what you must. Microsoft, same thing here. I have trim order in. I've been trimming. Make no mistake. Okay, the last trim I had was 431 during the week, and I have trim order in at 4, I believe 437, and then 448, something 450. I mean, I have a couple of order in that is pretty crazy as far as the price. But hey, if you get there, you get there. I also have a stop at 419. Okay, so on if it fall below that, I will get stopped out on 25% of my position because there's too much gain to not trim some, especially when I bought, all a lot of share down here on this ugly candle here below 400. Okay, I jumped in a lot, so I'm not gonna get back $20 of gain. It'd be silly. Did I cover all the Max 7? I think I did. But since we're talking technology, let's dive into some old tech. Adobe. All right. Yeah, it's okay. It's holding. It's it bounced off the major trend line, and yeah, if it break, okay, for me right now the key is I have a stop at 468. Okay, um, if it violate you know, 468, you can see lower, okay? But I'm moving that stop up. It was down here before. It was 464, and then I move it up yesterday to 468, okay? And it can hit it. It can hit it, and it even that's okay. What I do is I have a stop at whatever the stop I have a buy order below. Okay, so right now the stop is 468, but I do have an order to buy back at 460. So it is what it is. IBM. Uh, I bought a few share, not much. Okay, down here. I was looking to trim them out up there, but didn't get there. If it come back down to 164, yeah, I buy, I add. Okay, I like IBM up here, down here. I mean, and last of the old tech, let's talk about Oracle. I like Oracle here. I'm on record to say that, right? Channel low. Now you kind of like, hopefully those that got in, I'm out. Okay, so yeah, it's would I touch it? I probably more inclined to sell a put spread at 115, right? Because then you have 3 MA to protect plus the channel low. For me, that's the better play. Now, would I back up the truck and buy at 113.5? Yeah. Where the 200 is, line up with the ref low? Yeah. Okay. I wouldn't buy, well, I would buy, but then I would be concerned that it's breaking out of a channel. So I take that back. I would buy, but I would not back up the truck. Okay. Because when it break out of a channel, it better get back in a hurry. So for now, the strategy is 115, 110 put spread for Oracle. All right, let's talk big pharma. Oh, AbbVie, ugly week. Okay, I thought for sure the 200 is gonna hold. It did not. It's been an ugly week. Look, nothing but red, nothing but red. Okay, I don't draw in Fibonacci line. I use it, but I take it out quickly because it's just make the chart super messy. But look at how the fib lined up with many support and resistance. Okay, the 50 fib was the defending spot, and then it fell. And look at where the 61.8 is the ratio that most traders love. Okay, and that is right below 155. So I think if you want to buy more, for me, I have a big order in down there at 154.89. Okay, because it is what it is. It can come down there, but I think that's where the bot. Plus, that was an area of, okay, it was resistant, multi-year resistance, and then the big breakout. Okay, so if it come down to that point, that means that it has completely retraced 100% of the breakout that we experienced since the end of the year. Complete round trip. Okay, so that's the spot. All the people that miss out by selling here and didn't get back in, they will step in at that point. Okay, so as far as new buyer, those are the new buyer that will come into AbbVie. Okay, it is what it is. All right, let's move on to Pfizer. Yeah, is it a surprise? No. Okay, it's anyone that thought this move on Wednesday was sustainable, you're foolish. Okay, not much I can say, but you're foolish. You ignore if you think this was sustainable, then you ignore everything that I said about Pfizer for the past many months and year, or anything I said about TA. Okay, um, would I buy at 28? Yeah. Would I buy more at 28? The answer is yes. Would I sell naked put at 27.5? The answer is yes. Okay, we're in the first inning of this turnaround, and as of last week, I said that the 200 moving average is going to come down to the 29 level. It's coming. It is coming. Right now, it is 29.63 ish, right? The week before, it was 29.97. So it came down a good 30 cents. Okay, so just imagine another 30 cents and another 2 weeks, and we would be right around 29. Okay, to me, when I said last week that we have about 3 weeks left before another big move is come, we are on track for that big move in 2 weeks. It was 3 weeks last week. Now it is 2 weeks. We'll see. That will be interesting to see if it can break out over 29 and maintain, because the 200 is going to flatline slowly after that. Okay. For now, the 20 is rising, and the rest of the other 2MA is flatlining. They will start to rise as well. Things are turning for Pfizer. Okay. Vertex, I trim and trim and trim. I'm down to, I would say, less than half. All right. Yeah. I trim at 451, 455 plus. I have another order in at 458. I keep on trimming. Okay. It's, like I said, a beautiful move. If you bought this on earning below 400, yeah, we got 12% move, right? Yeah, beautiful. Who's gonna complain, right? Now, if you want to do a channel, you can do, yeah, there you go. See, a channel within a channel. So now, so what does that mean? Up there, 468. Okay, so if you are greedy, you can, heck, I would do that. Okay, I would set another trim order in above 458. Instead of like just 458, I'm gonna do 468. Right? So yeah, up there. You do what you know. Right now, it's in price. What some people would refer to is price discovery zone. Once it moves above all kind of resistance, new all-time high, it's price discovery, because you need to go to a spot where people said enough is enough, right? Same thing with Nvidia. Nvidia is definitely in the price discovery area because it's all-time high. It's breaking all kind of TA, and this is stretching it. Okay, we are stretching this TA here to come up with this, and doesn't mean that it's gonna hold. Okay, it can blow off. Who knows? Okay, but for now, what I'm doing is I do have a trim order in at 444. Okay, basically this trend line right here, this zone. So if it break below that, see ya. I buy back maybe 425. Right? It's too much gain. Okay, $20. I'm not waiting $20 to the 20 MA to trim. I rather trim at 444, buy back at 424. $20, right? Um, let's see. Since we are talking about that, Eli Lilly. I did trim during the week, right? It's once again, you are in price discovery zone. Okay, it's all time high. It's tough. It's tough to buy Eli Lilly here. It's a lot easier to buy back some share at the 20 MA. But until then, yeah, if you want to have a crazy trim order in at 850, 840, you can. But yeah, it's another one of those stock where it runs so much. Okay, say it's in rare air. There is really no. It if you look at the weekly chart, right, you see this white line. This I'm going to make this white. Okay, make this white because it is a fairly key, right? Look, okay, it was support. It was riding to the all-time high down here, and then it reject, break out, check back, fail, and yeah, it's like I said, if you want to trim, okay, that's why I trim, right? I don't have a lot of share, but I did trim, and yeah, I don't have a lot of share, so it's not like I need to like raise my stop to protect the gain on the few remaining share. But at the same time, this is very hard to add. Okay, it was easy to add down here, not down here, not up there. Okay, so Amgen, wowza, right? But still, nothing here to see. Nothing here to see. Nothing. I wouldn't buy at the 20 MA either. I wait down here, okay, 290. I'd rather wait for the resistance support zone here to buy, and can it come down and fill the gap? That would be nice. That would be the spot, okay, because you're talking lining up with the gap down, right? The big gap up, it would fill the gap, and it lined up nicely with the 200 moving average. So yeah, that's the spot. Okay, if you want to sell put spread down there, yeah, that's the spot. If you squeezy about buying it up there. All right, let's move on to banks. I'm out. Out. Goldman Sachs out. Um, I trim. I think the last time I trim was like 465, I think, and then I put a stop at 450 something, and yeah, it's out. Okay, it's out. Uh, it's so much. Okay, we love Goldman Sachs here, right? At the dance, and then it's been a wonderful 15% move. It's time to go. Bank of America, I'm also out. Okay. Yeah, it's time to go. Okay, it's time to go. I don't have much to add here, but it's time to go. Nothing there to do. Okay. JPM, if you still have it, it was time to go a while ago. If you want to put a stop at the 20 MA or 50 MA, you should. If you don't have a stop, but yeah, it's time to go. I'm not a big fan of what's the banks right now. No, not a chance. Okay, not a chance. Since we're talking about banks, credit card too, not a chance. AXP, not a chance. My short spread, fail. Lost money there. Okay, AXP, no. Visa, more attractive than AXP, but still, not yet. Okay, not yet. If you want to buy Visa, at least ref low 267 ish, yeah, 266. For me, I put the alert there because I think that's the spot I would rather buy all the 200 MA. Okay, but for now, it's getting more attractive, no doubt. Visa is more attractive, but still, no dice. Now, the one that I did buy during the week after I got stopped out of Goldman Sachs and get out of Bank of America is Toronto Dominion. Yes, I start to buy 56, 56 and a half was I think my first entry, something like that. I did buy as low as 55. Okay, it was crazy. I had ordered in at 56, 55.5, 55. I bought not a lot. Okay, not a lot. I would buy more, but so far so good. Those shares are in profit because I think my average is 56-ish. But yeah, that's the one. That's the one to buy for me. Okay, let's talk energy. USO. This is it. Channel low. Okay, what more can you say? But if you want to buy, this is it. You got Confluence, all kind of stuff here. Okay, all kind. You got the 100, the 200, channel low. Yeah. Okay. That if you want to nibble USO, this is it. You can put a stop where 73.88. Okay. If you buy here, put a stop. Okay, down there, because if it fall out of the channel, breaking to 100 and 200 and ref low, then maybe it's not worth holding. Okay, but for now, I think that's the spot that if you want to own USO, this is it. I like it here. I don't mind it going lower because that's a good thing for CPI number, right? So far already, what it's doing in May. Okay, May has a week left. This will bode well for the CPI in by June 11th. Yeah, so yeah, this decline didn't help the CPI that came out 2 weeks ago. Okay, because it was dealing with April, but now, yeah, it has replaced USO is back to where it was back in March. So yeah, I'm liking it here. Okay, I'm liking it here. It can go sideways, and if it break, that's fine. Now, if it break, okay, I do think we're gonna come down to at the least this ref low here, 72. That's why I've been selling or looking to sell 72 put, and there is just not enough juice in them, even going out 2 weeks. Okay, it's ridiculous. I'm not gonna sell something 2 weeks out and get not even a quarter. Okay? Not even 25 cents on a put. No way. It gotta be juicier for me to take that kind of risk going out 2 weeks, because in 2 weeks it can come down, right? Because if this channel break, it can go down a lot. XOM, breaking, danger. Okay, danger. Yeah, not good, not good, not good. Okay, um, is it a surprise with USO dropping? Yeah, not a surprise. Okay, so not touching. CVX, same thing. I had a few share left that my bad for not setting a stop. Okay, I trim a lot. I trim probably 80% of my position. So I kicked myself for not setting a stop. Um, for now, no buy, no buy. Okay, no buy. No, no way. LNG, I would buy LNG 155. Okay, I would add to my LNG. I like LNG more than any other energy stock. Okay, so for me, that's the place to be. If I was to put money, I have very, very little exposure to energy. So that was one of my reasoning for not putting a stop on Chevron, because I have so few. That's it. That's the only, thing I had all week. I have no USO exposure. So that's my excuse for not setting a stop on Chevron. But I do have a small position in LNG, and I would like to add to that down here. Okay. Um, let's end this on Met Device. ABT, dog, no. Okay, it was no and no and no. No, it's ugly. Now, would I buy it 100? Yeah. If it crashed down to 100, I would consider selling put spread, you know, 98 and below. But nah, nah. It's a dog with a lot of fleas. Lots of fleas. It's a flea fill cover dog. EW. I trim. Okay, I trim. I gotta stop in at 86. Okay, I got out completely. I bought back. I trim and set my stop. Okay, it is that simple. Medtronic, I got out on earning day. Oh my goodness. Okay, when I saw earning, and it was not bad. It was not great. It was not good. It was not anything to be excited about. And I saw pre-market, it was popping 86 to 86 and a half. I was out. Gladly took that gift. Okay, I mentioned it many times in the private chat group. Uh, Around 7 o'clock, between 7 and 8 o'clock, I'm like, get out. I'm getting out. I'm selling everything. Okay, and that was the right move because now, I mean, in this days and age, if you don't beat and guide higher, that's what you get. Okay, so no touch here. Now, does not mean that I don't consider selling put spread 78, 75. Yeah, that might be in play. On further weakness, I might consider doing something like that. Okay, but where would I buy? Maybe the gap fill. Okay, maybe going long. Now, if there's a bigger pullback, then I would sell put spread 75 and below because then I would use the gap fill as my protection. But for now, I'm watching to see if this will hold. If this doesn't hold, if this hold, then 78, 75 put spread might be in play. If this does not hold, then 75, 70 put spread will be in play. Okay. Um, let's end this on beauty. Ota. Woo! It was a little scary on the week because at the start of the week I saw put spread on both Lululemon and Ota. I had 3 put spread out there, um, and it was dicey. It was 375. Okay, I sold that put spread either last Friday or on Monday. So yeah, back then when Ota was $20 higher, it seems so innocent. Oh, so innocent. And then, oh my God, right? It came down. It was close. Trust me, it was ugly. It came as low as 375. I was staring at 375, just like, really? Are you gonna do this to me? Oh, it's scary. It is scary. Now, if I was to go back and sell another put spread during the week, um, holy cow, it would be too scary. Okay, earning is coming up, people. Earning is coming up. All right, so be very careful. Earning is coming up, so watch out. I would not do it. Okay, if you do it, do way below. Yeah, way below, please. Okay. Lulu, same thing. Oh my goodness, that was insane. Okay, I saw the put spread. It was 285. Okay, so still on Thursday when it now I saw the put spread, of course, before this dip. Okay, so yeah, I saw Lulu when it was like down here, right? I saw this. I'm like, oh, okay, 321 ish. Why not? I think 285 will protect me, right? And boy, it started to look scary on Thursday. And my God, okay, so be careful, be careful. be super careful. This segment is getting obliterated. Obliterated. Coty, for those that don't know, that's another one of those makeup companies, small one compared to Ulta. Okay, coming down to support here, but yeah, this entire sector is under siege. Okay, Estee Lauder. Yeah, if you want to buy Estee Lauder, it's coming down to support. It better hold here. Okay, yeah, it's this sector is ill. It is ill. Okay, that's all I gotta say. Um, I think the only one that is doing well because it is cheap, and I think it highlight a lot of the weakness in discretionary spending. Is if you don't know, outside of Coty, there's one called Elf. Okay, Elf. They have booming earning. Okay, and Elf is gaining market share because they are cheap. They are, for those that buy makeups, I don't. But if you follow all the reports on Elf, they are the cheap. This is what Elf is doing. Is what hurt EL, Estee Lauder, hurt Coty, right? So yeah, it says a lot about the strength or the weakness of women buying makeup because times are getting tough. Even looking good require looking for bargains. That's it, people. Have a good weekend.